Hey, what's up, everybody? I'm Justin. I'm the COO here at Meta One, and we are here along with Fernando. Fernando is our director of training and also our team lead for our technical support team. And we're super excited to be here. We're going to be starting to do these Monday market segments, as we're calling them, every single week. And we're just going to be talking a bit about the market, a bit about what's going on in the world, and just keep everybody updated and informed. So, start out, Fernando. Thanks for hopping on and doing this with me. And a little market check. Looks like we're still pretty volatile. Ethereum's down 6% today, and Bitcoin is down almost 3%.
Yeah, I agree with you. Thank you for the introduction. I feel like we still have a lot of going down to go.
Yeah.
So today we're gonna be talking a little bit about the reason why I believe the market still has a little bit of room to keep going down. And the reason why is because, well, we're gonna have a couple events this week that are gonna most likely impact the market. And two of them are gonna be one, the federal funds rate is going to be released on Wednesday. And on Thursday, we're going to have the release of the numbers for the GDP of Q2 of 2022. So for those who are not familiar with what this means, is that when we have two consecutive negative trimesters, the economy usually falls into a recession. So last trimester, we had a negative growth on the economy. I believe I actually have a chart here that I'm going to open. Give me just a second. Yeah, so we can see that last trimester, we had a negative impact on the economy of minus 1.4%. This means that the economy, instead of growing, it contracted 1.4%. So, I mean, this isn't really that bad because it's just one trimester and it doesn't really affect the market that much. I mean, it did affect the market because we can see that, I'm going to go here to the S&P 500 and we can see that the market is in decline, but it's not that bad. But if we do have two consecutive fallbacks, two consecutive trimesters where the GDP is negative, we have a massive spike down, like the one that we had on 2020. And before we started recording this session, I was talking to Justin about what happened in 2020, which is not a lot of people know this because COVID just started and everyone was freaking out about the vaccine and, the new bacteria that was killing people, quote unquote. So everyone was freaking out, right? And not a lot of people knew that behind doors, we had a tiny recession. We, let me tell you when it was, from April to July, we had a recession. We had two consecutive months where the GDP was negative. And I believe that the first trimester, it was minus 6.4. And then the next trimester was minus 34.4. So it was a big impact. And if we go back here to the S&P 500, we can see that we have a massive decline, one of the biggest, if not the biggest of all time. And after we got out of the recession, the next trimester, we had a massive spike all the way up to 30%. And we can see here in almost, less than 3 months, we recovered almost all the losses that we had in like 4-6 months. So, yeah, I mean, what I'm trying to say here is that we might expect something similar to happen in the next couple of months if we do fall into a recession. It's not written in stone right now. The only thing we know for sure is that last trimester we had a negative 1.4 growth on the economy. and that things right now are looking very likely that we're going to have a decline for this trimester again. And if we do, that would place us in a recession. So that could be very bad. You know, if you're the owner of a company or stocks or, real estate, could be very bad. But eventually the market's going to recover. And from investor point of view, this could mean a good opportunity for market capitulation. So if you have money on the side, it is very likely that we're going to see a drop in the prices of, great stocks like Amazon, Google, or assets like Bitcoin or Ethereum. I personally think that we can go all the way to 12K for Bitcoin. And for Ethereum, it could go all the way down to $500, $600. So like I said, if you're an investor and you're waiting for a good opportunity to jump into the market, might be a great idea to wait, a couple of weeks to see how the market reacts. And yeah, I mean, I know that a lot of people are scared because, when we fall into a recession, that usually means that a lot of companies are going to have a massive amount of debt. So they're going to be firing people, and the price of stocks is going to fall down, and there's going to be a negative impact overall on the market. But if you're an investor, this is an excellent opportunity for market capitulation. So yeah, that's pretty much what I wanted to talk about right now with you, Justin. I don't know if you want to add anything to what I just said.
Yeah, man, that's cool. Well, for those who are new to macroeconomics, GDP stands for gross domestic product, and it is basically the total value of all products that are made and services that are made and produced in a single country. So, of course, we're talking about the United States here today, but the US, unfortunately, has a very big impact on the rest of the world. And I think that's something that's interesting as well to talk about a little bit is the fact that this is unlike 2008 in the fact that it's not just the United States that is having trouble economically. Corona, whatever the hell you want to call it, that whole thing was a worldwide issue, and it has created some worldwide issues. And it's just interesting to think about that. I was just reading an article in Forbes that was talking a bit about how the UK economy is in a really big shambles, and that the Bank of England is predicting the worst recession in 300 years.
Wow.
So that's really big when the central bank of the UK says that they're going to have a recession that's worse, hasn't been seen in 300 years. So and I agree with you. I think
I'm scared.
Go ahead. No, please.
No, I was just gonna say that if I was a little bit scared before, now I'm super scared.
Well, I'm not trying to scare you, and I'm not trying to scare anybody. I think the important thing about what we're trying to do here is we're just trying to educate everybody, right? We're just trying to share the truth, because the problem is that the mainstream narrative and the mainstream media is completely ignoring this. Everyone in mainstream, for some reason, just thinks that this is not a thing and where everything is okay. And obviously, I have my personal opinions about that, but it's not the truth, right? I mean, we can see the writing on the wall so many different places. Fernando, you live in a place that's outside the United States. Are you sort of seeing the same kind of economic impact and economic recession signs that we're seeing in the United States?
Absolutely. And I feel like it's even worse here where I live. For those of you who do not know where I'm from Mexico, and it's worse here because not only are prices increasing, but here we do not have like social security programs. So we don't have food stamps. We don't have like unemployment. We don't have anything. We don't have any programs. So if something goes wrong, you're on your own. So things are going wrong. Most people are on their own. And to top that, we have an increase on the price of everything. So, I mean, the other day I was talking about this with a friend that a kilogram of meat 2 years ago was like $10. Right now it's $20. And that's an increase of 100% in 2 years. So like I said, not only prices are increasing, but the government's not helping at all. So a lot of people are having a very hard time right now.
Yeah, absolutely, 100%. I totally agree with you. And you know, it's the thing that we have to look at here too is it's not just about you know, some negative GDP numbers or the market isn't doing very well or something like that, but we have some systemic issues that are going on that have been building up for quite a long time, in my opinion, and just seem to get bigger and bigger and bigger. So the big thing that I've been looking at the last couple of weeks is kind of the tech industry, how many layoffs are starting to happen, and also what's going on in the housing market in the United States, because the housing market is nuts. And this is even something that I'm starting, my relatives are starting to see in Europe as well. And I'm also curious to get your kind of view from where you are, if this is kind of happening. But let's start out with talking about layoffs. So this is a really interesting chart that I found. This comes from a video from Reventure Consulting on YouTube. And it basically looks at the layoffs for the last since last year into this year. And you can see that since March, we've had a consistent rise upwards in layoffs. So this is 114 major tech companies who are announcing layoffs. And basically what Crunchbase does, that's where this source is from, is if the layoff amount is more than 50 jobs, then that information goes on this graph. So there are 114 in June. There's 114 major companies that are laying off more than 50 jobs.
Wow.
Isn't that nuts?
Yeah. And I, from the cryptocurrency space, I heard that Coinbase is firing a lot of people as well. So yeah, there's a lot going on.
Yeah, it's crazy. And you know, like you were talking about with where you live and the fact that there's no social programs. Well, here what's happening is, you know, our social programs have been a complete disaster, and they haven't been really for the people from the beginning. And so what we're starting to see is people who are working full time or working 2 jobs or 3 jobs that are homeless because they can't even pay their rent, which just is mind-blowing to me. Like,
Yeah.
I'm just like, what is happening right now? You're working a full-time job or you're working more than one job and you can't pay your rent? Eek.
Yeah, that's really messed up. And I feel like this is going to have a major impact in the economy all over the planet, because inflation is making it so that people cannot afford anything anymore. So
Yeah.
if the people working these jobs, you know, the money they make is not enough to buy food and pay for rent, they're not going to work anymore. So if the people no longer work the jobs and buy the products, what's going to happen to the company? It's going to go broke. It doesn't matter how much money the government gives them to bail them out. It's not going to matter, because what's the point of having $1 billion if the money's worth nothing because nobody's working? So even if you pay, let's say, someone $2,000 and you feel like it's a lot of money, it's really not, because now rent is worth $2,500 and you still have to pay for food, you have to pay for gas, you have to pay for everything. So it does not make sense. The numbers do not add up. So when this happens, the economy is going to collapse, because what we need to realize is that the consumer and the CEO are one. And if the CEO does not look for the consumers and the consumers do not look, you know, the other way, it's not going to be sustainable. And we're going to have what you just mentioned, that people are going to be working 3 jobs and they're going to, be all tired, and they still won't have enough money to make for rent and for food and for gas. And what's going to happen? The economy is going to collapse. And
Yeah,
that's,
exactly. Because
yeah,
like you're talking about, this inflation point is really important, because what happens here is what happens is a debasement of currency. And this is the problem that we've had with this fiat system from day one. And it's exactly why we're doing what we're doing at Meta One, and why right now, I mean, it's a pretty easy sell to talk about with holding in Meta One, because you have, a little bit of volatility, but it's like there's basically it's very stable right now versus the rest of the market, where last week at the end of the week, the whole crypto market was up by like 40% or 30% or something, and then over the weekend it lost another 20.
yeah.
So it's just like it's all over the place. And trying to play this game, unless you're a person like yourself who is extremely knowledgeable and experienced in trading, and has been doing it for a while, it's not something that you really want to play with.
I agree. I mean, even for me, sometimes it's too intense.
Yeah.
Back in the day, I used to be, I used to trade a lot. I know how to trade very good, but I kind of stopped doing it because it affects my emotional state a lot, because you're all day stressed watching charts. Like, will it go up? Will it go down? Will it go up? Will it go down? And
Yeah.
yeah, I might made more money doing that because I was really good at it. So I would say like maybe I had a win rate of about 75%, but my mental health was very bad.
I'm sure it
So
was.
yeah. So now what I do is like, I'm already in a comfortable place. So what I do is I'm more of a long-term investor. So I'm not looking all day at charts. I'm not worrying about the interest rates, all that. I just leave my money there 4 years, 5 years, and when I see that the market goes up, I sell, and then I wait for the market to go back down again, and I buy. So that's really improved my way of living my life. And yeah, I mean, it's crazy. It's crazy. The market is very crazy, and I don't recommend it to everyone to be a trader, because it's bad for your health.
Yeah. And that's why we created Meta One, one of the reasons.
Yeah,
And
there you go.
also talking about debasement of currency and fiat versus metal backed, et cetera, et cetera. I wanted to share this little clip. It's about 5, almost 6 minutes long. And it is of Raul Paul, who is an investor, and also an educator. He has a education platform for investing and finance called Real Vision. And he was on the Robert Kiyosaki show, Rich Dad Poor Dad guy, and was talking a bit about the economy. So and debasement of currency, and kind of the perfect storm that's happening right now. So I wanted to take a listen to this and see what you thought. So just a little context here. What he's basically talking about is he just kind of went through a little bit of a history lesson in this broadcast, where he was talking about sort of the major depressions, recessions that we've had throughout time in the 1940s and the 1970s, then in 2008, and is sort of talking about the comparisons between then and now and what's happening. So let's take a listen.
Was sure
2008. 2008, if the oil price was $147, inflation was 6%. The Fed had been cutting into that because the economy was imploding. 2018, exactly the same. Oil prices high, inflation high, the Fed were hiking rates, trying to tighten the balance sheet. And what happened is the economy rolled over really quickly again. Okay, so what's going on here? Why does this phenomena keep happening? Everyone extrapolates inflation out forever. What actually happens is that consumption falls because we've tightened monetary conditions. So tightening monetary conditions to ordinary people means the cost of your mortgage has gone up at the fastest pace in history. Over a 1 year period, mortgage rates have never risen this fast. So any money you borrowed has suddenly got much more expensive. Your wages haven't kept up with the cost of just basic services like food. So you're actually feeling poorer. So you can't consume as much, and you start not consuming other things. People overextended on housing because they rushed into housing in 2020 and 2021, and the rates have gone up for them. Also, just the rise in things like the cost of oil has meant that, you know, gas prices, all of this stuff, and then the rise in the dollar, which is a monetary tightening. All of these things get together would suggest, and I put them on a chart, it suggests that the ISM is going back to 30, which is as it was in 1974, which is a terrifying fall. Now,
what does ISM stand for?
Institute of Supply Management. It's the survey of buyers at corporations who buy goods and services. They ask them, you know, what is your reading the economy? How much inventory have you got? What are prices paid like? That kind of stuff. And they create these surveys, and they're readily available online, and you can have a look at them. And they go up and down with the economy. They tend to lead the economy. And it's suggesting that if we're not careful, we could have a very sharp, nasty recession, meaning kind of a negative 5% GDP recession. It might be short, depending what the Fed does. And we'll come on to that in a bit. So we've got the setup that we've seen many times in the past. We've got the forward-looking indicators, this monetary tightening, suggesting we've got some real pain to come. Then the anecdotal evidence, we're seeing all the tech companies who were bulletproof laying off staff and giving earnings warnings because everybody can't raise prices enough. So their margins are falling and people have overextended. Amazon said, we've hired too many people. They're one of the biggest employers in the United States. Okay, this is not good. But the answer to higher prices is higher prices. And that's what's happened. And everybody's looking around you themselves saying, well, what's going to break when stuff like this happens? The market goes down, something's going to break. You know, we're looking at what bank is it? What hedge fund is it? The actual answer is it's the economy. The economy has just broken. And the Fed are going to have to pivot.
And that's what the IMF is saying in Davos yesterday.
They're saying, and it's dead right, the monetary conditions that we've imposed on corporates and people is the biggest tightening in all history.
Wow.
We've also got China slowing down very fast because of the lockdowns, but also they've been in recession. So we've got and Europe with a war and having to deal with this energy transition. So we've got no leg of global growth here. Oh. Now the question is how bad does this get? So let's talk some scenarios.
May I ask a quick question? Okay, when people use the word recession, that means two back-to-back quarters of negative growth. Is that your definition?
That's the technical definition of a recession.
So what does it mean to Raul in
Generally,
every day? What does it mean to you and me?
To you and me, I think it means a loss of jobs and a loss in your net worth, because it's the falling of asset prices that comes with a recession.
Now, what's the possibility of sliding to a depression?
So depression, I would suggest, is a much longer, more extended period. I don't think that can happen right now. Now, I don't say that with certainty. I never do. Talking probabilities. The reason being is there's one piece of magic: the Fed balance sheet.
I agree with everything.
Yeah, I just love the way he explained it.
Yeah, I agree with everything. I mean, everything he said, I feel the same way. Everything he said, you know, it's exactly how I feel. And I think he nailed it, you know.
Yeah, I think so too. I just think it's really, I think the thing that stuck with me the most is when, you know, he was kind of talking about that global perspective that I was speaking about before, about how, you know, 2008 was more of a US focused recession. And now, you know, we've got all of these different factors happening all over the world, the whole Russia-Ukraine thing in Europe, China is it's scary what's going on in China.
Yeah.
I actually was just looking and reading a little bit about it, and banks are actually not letting customers withdraw money from their accounts. And
Yeah.
I think that you said this a while ago, but you said that this is something that you really feel like could happen in not only countries like China, but in other places. And
Yeah. I
yeah,
said that like 3 months ago. Like, imagine this starts happening, and bam, it happened in Sri Lanka, and it happened in Canada with the truckers, and then it happened in China. So it's happening right now. And
yeah. It's like you have a crystal ball, Fernando.
I know, man. Well, the thing is that what's going on right now is super crazy, because
Yeah,
what we're realizing right now is, yes, the humans need the economy because it allows you to keep track of ownership and all that. But the economy we created does not work. So we're living in 2022 with an operating system of Windows 95. So it's it doesn't make sense. The game has evolved so much, the computer has evolved so much, that we need a new operating system. We need a new method of monetary policies, and a new way of printing money and giving value to things, because the way that we're doing it right now just proved itself that it's not working, and that it's gonna eventually at one point break down. And I feel like we're months away from that. I feel like we're months away from the economy collapsing 100%. Like these guys said, I don't think we're gonna go into depression. I don't think we're gonna be years, without an answer. Why? Because he said it as well. The technology, we're too evolved right now. We have blockchain. We have the internet. We just need to see what's gonna happen. And there's a lot of people that have proposed a solution of. I think there's this guy called Andrew Yang, who's talking about universal basic income, and he's talking about other stuff that I think that's going to help improve the economy, because right now the problem is that the people do not have enough money to pay for rent. So if the government would only give you maybe just enough to pay for rent and for a cell phone, everything else you make is profit. And people can live like that. I mean, if you have money for rent and for the cell phone and for the food and everything else is just extra, I mean, people are going to be okay with that, because they can have a healthy living, having enough money to pay for rent. But we also have to see the implications of printing more money and all that. So it's a crazy ride to find a solution. I think I was talking about this the other day, that I feel like we need to have more currencies. We have to have deflationary currencies. We need to have we have a currency that's for universal basic income. We need to have currencies backed by metals. So I think that I mean, I might be wrong, I don't know, but I think that there's a solution somewhere in between the lines, and we're gonna have to figure it out eventually in the next couple of months, because I'm pretty sure that the recession is coming and it's gonna get bad. Like he said, our net worth is gonna go down, and a lot of people are gonna lose their jobs.
Yeah. I mean, for me, I wouldn't agree on the whole universal basic income from the government. I just feel like that just makes things way more people way more dependent on the government, makes them more kind of debt slaves to the government. I'm more of kind of that view of just moving in a different direction altogether from that system, because I think, like you said before, it's the system that's broken. That's the biggest problem. And I think that I think that Meta One is definitely part of that solution, and is a really great place to be able to find stability right now in with everything that's going on.
Yeah.
And can really have the massive potential to be the metal backed currency of the world. And we need to do something different. So, I think that there's a lot of great ideas out there, and I think that we've started moving in the right direction. And, I just want kind of to end all of this by saying to people that none of this that we're talking about is designed to scare anybody. I'm definitely not a proponent of fear or fear mongering. It's really, we're just trying to educate you so that you are prepared, so that you are ready, because the signs are everywhere. And we understand that not everybody can just look at this stuff all day and really pay attention to it, but we're kind of here to be able to share the tidbits of knowledge and information that we have, our opinions. And what you choose to do is what you choose to do. But I just want to see the world a happy, healthy, and abundant and peaceful place. And I know that you want to see that too, Fernando. So
I agree.
yeah, man. Well, thanks so much for taking the time. I think we went a little longer than we expected, but
Yeah.
there's so much going on right now that
Yeah.
I think we could probably talk about this. Well, yeah, we could get excited about it, and well, not excited, but it's there's so much going on. It's moving so fast, and I think it's really important for us to talk about these things. So yeah, I guess we'll see what the GDP numbers are on Thursday. That's going to be a really big indicator. And then we'll be back next Monday with a new market segment, and we'll talk about the results and what else is going on.
Awesome. So
Cool.
we'll see you next Monday.
All right. See you next Monday. Thanks, everybody.